So good morning, active traders, and welcome to our Trading Week Ahead broadcast. Coming at you live here on Saturday, July the 3rd, 2021. I wanted to wish you all the very best for a outstanding, a happy, peaceful, and safe 4th of July weekend. Do be sure to drive defensively if you drive, and stay safe out there because it's nuts. Just like the stock market, going bananas up at an all-time new high. Really nice breakout following our positive jobs report with new payroll over 800,000. Lots of momentum and volatility in the market to work with. So we'll take a look at the best charts coming up right now. So that's our broad market. I'd use 43.70 as R1 for a trigger, and I would use a loss of the 43. Very tight. I'd play tight. Just a loss of 4,300 would be a price action or an index action type support level. The correct S1 level is right there near the 4250. So support is 4250, resistance is near 4370 in the S&P. If we take a look at our VIX, it got all the way down to 15 yesterday, right? And we're testing, lows here near the 14. So we got 14 as support and 18 as resistance in the VIX. And do keep an eye on the volatility index next week as I continuously monitor it and use that to make trading decisions, at least in my own capital accounts. It helps to keep an eye on this. What it means to you as a trader is if the VIX keeps staying down here under 18, it's likely to continue to be a strong upside market. But if the VIX starts to climb up above 18, 19, 20, which when it does, it often does so in a single day, right? It spikes up and then it drops back down again. When the volatility index increases, especially over 18, and particularly over 20, that's the professional trader's signal, is a 20 VIX, pulling it down a little bit to 18. Keep an eye on this. So we stay the course long as the VIX stays under 18. But if the VIX starts to get back over 18, you may want to go to cash in a lot of your positions. Now, my best real money swing trade exit last week was selling the 38 in Smith & Wesson, right? Remember we covered this one last week and we said the loss of 30 would be major support. I looked it up in my Fidelity account. I'd been working into a swing trade in this guy on the way up, and my average cost basis, when all said and done, was around 29.5. And then I sold it virtually the entire position at near 38 on Thursday. And that was a really good exit. And I called that and I told my traders when it was up near 40, I'd be selling my position at 38. So I gave my traders heads up on exactly how I was managing the trade as well. But that was good. It's near a $10 round trip in about a week. So in a week and a half or so. So really good playing Smith & Wesson. Do keep an eye on this one. We'll be covering this one in the live room to see if it's able to get a bounce for intraday and or swing trading next week as well. If you look at the intraday chart, you can see nothing but sellers the last couple of days. A nice pop, then a drop, loss of the 2-day low, right under the 35 whole number support. Magic 35 whole number support, which is now new resistance, and 31 was whole number final support on the day there. So I'm going to play with it on the way up if it bounces back over 32 or so. So that's Smith & Wesson. Sales were only up 67%, which led to this gap. And then the price promptly nearly doubled from 20 to just under 40. Virgin Galactic taking off, rocketing up to new highs back on last Friday. The entire past week, it's been nothing but mostly selling pressure, as you can see, as evidenced by all the red candles. So, by the way, too, if you have any tickers you want me to look at, do post a limit of 1 or 2 per person. Okay, I got a really big turnout today, so I only have time to cover maybe a couple dozen. But if you guys have tickers you'd like me to pull up for swing trades, I'll be happy to take a look at it. Let's blaze through these charts. 3D had a really big run earlier from 30 to just under 40. It's currently holding steady. I'm looking for this over 42. Oil's been strong lately. Oxy with crude way up over 80, right? Brent's up at 85 or was up near 84, 85. And we Oxy-P'd up near the 34. I'm looking for a breakout in OXY if it gets over $34 a share. SM has a really similar chart pattern and a nice uptrend going all the way from a paltry $7 a share up to $26 a share for a fourfold increase in value in this guy over the recent months, looking for breakout up in new highs over the 27 in SM. Sierra, Mike. Some of the you folks had mentioned last week include some of these, and let's blaze through these quickly. I want to shift gears to look at some day trading charts in just a second here. But let's finish up by looking at some of the very strongest, the most powerful, the most consistent, the very strongest wide range swing trading charts that could potentially do very well. CPE, really nice continuous uptrend. NSA, great chart from one of you folks last week. Never did take out that 52, but it's on my watch list if it does. WTI for a cheapie, it doubled in value, right? It's one of those ran from 2 to 5 here. DEN, also another spectacular swing trading chart. Now, here now would be kind of a danger area because it looks like it's pulling back. Now, that doesn't mean a top is put in, but because of all these red candles and a pullback off the $82 share high, I would look to sell this if it lost, say, 72 support. I'd look to scale in if it breaks the 82 up at new highs. In terms of commodities, we've seen recent pullbacks in everything from lumber and steel and copper and so forth. And we're starting to see a little bounce in the precious metals like silver. You can see it's been in a bounce the last few days. Not really exciting yet, but something worth keeping on the watch list. If our silver and gold ETFs start to bounce, that's SLV and GDX. So I trade those two. Neither of those is spectacular yet, but they're trying to bounce. So do keep an eye on our precious metals next week. Now here's an interesting chart, JYNT, and thanks to the traders for mentioning, this is from one of you folks this morning. Really good directional run, nice tight clean pattern with minimal pullbacks and fuss and muss and chop and churn. This would have not had too many sleepless nights holding on to this thing. Ran all the way from 30 to just under 90, so nearly tripled in value. Now we've got a bearish engulfing up here, right? That's a classic bearish engulfing. And I do urge you to learn candlesticks exclusively from my colleague Steve Nissen at candlecharts.com because he knows that he's the world's top expert, right? Why would you learn from anyone other than the world's top expert? I mean, just like, why would you shop online at any place other than Amazon, right? Online auctions other than eBay or whatever. Go with the biggest and the best, right? Anyway, bearish engulfing alert. So we don't want to go, it'd be a short under the loss of 80. It would be a long on a breakout over, say, 87, 88. But anyway, that's a good chart. So thanks to the trader for heads up on that one. Look at day trading charts next. Let's finish up with these. LSI, spectacular breakout. I'd be playing this north of 112. Again, not a trading recommendation. All information is for educational use only. Do not make actual trades based on what I say. Instead, just learn and practice. I mean, it's up to you what you want to do, but I've got to say that for compliances. All information is for educational use only. I'm not making advice about what to buy, sell, or hold. Anyway, Apple looks good north of 140. CVA looks good north of 1850. Nice pennant pattern. Thanks to trader for heads up with that one earlier this morning. That's from Bill. Thanks. NIO's been a popular favorite in our live room for a very long time, and it's had really good days. Early part of the week, I think it was Monday, Wednesday, we had the best upticks in NIO, and we had a nice $2 run from my alert on Wednesday, and this one was a good play. And CCIV looks okay as well. Here's an interesting play, Virgin Galactic. I was looking for a bounce long for our members yesterday because it had gapped all the way up to 56 and did my favorite pivot pattern, or almost did my favorite pivot pattern, which is one in which it gaps up, then it sells all the way down to the previous day's high, and then bounces. Now this did not bounce off the previous day's high. It just kept going down, found resistance at the prior day's high. I think the one trade we had that was a good one was a long call at, I forgot exactly where. I think it was like 45.7, sell to 46 and change. So we got a little bit of a bounce out of it, but this just for future reference, the pattern that we look for in this is often a three-step mean reversion. Often you'll get a gap up, it sells down to the previous day's high or thereabouts, bounces up to around the middle of the trading range, and then kind of grinds back down again. That's the trade I was looking for. The market did not oblige. Surprise, the market doesn't always do what I want it to do, but we were ready for it in case it did happen. And they often do occur, so always good to kind of put on your pattern recognition skill hat and develop a trading strategy for that. Imran had a nice pop earlier in the session. Staff. DD, we called the long for a bounce off the low there near 15 and change. I think it was 15.20. Went up a little bit, but just a bit. LAC, now this was a nice big runner for us yesterday. We called the long on the way up, and this one had a multi-point run for us, and I got them out near the 42, and then I said short on the way down, and I gave specific entry triggers on the right side as it dropped, as well as earlier on the left side breakout. So ALEC is an Alpha Lima Echo Charlie. Did a really nice run from 24 to 43, so nearly a $20 run, which is good. $20 in a single day on a $30 stock. Now, the kind that I don't like as much, still did really good from a percentage standpoint for us, is BLIN. It ran all the way from the low 5s to the high 8s. So a multi-point run. But what's the problem with this chart? Choppy as heck, right? And that's the problem you find with these cheap under $10 stocks, is they're often like walking in a landmine. It's virtually impossible unless you do my intraday swing approach, which is where you put on a trade early in the morning with smaller share size than you would for an open range breakout scalp, and then put a hard stop at somewhere under SB. One thing I learned over the years is don't try and fudge and get in trail stop sooner because you get shaken out. The stop has to be under the pre-market, at least the 5 o'clock pre-market low. So that, like if you bought 620, you'd have to use 520 as a protective stop in pursuit of being able to let the guy run all day long. And that's a very specific strategy. One of many that I teach my traders in the live room is to put on a trade on a breakout to the upside on small size, put a trailing stop or hard stop, I should say, put initially a hard stop right under support, and then let it go until lunchtime and see what it's doing at 11 or 12. If it keeps going up, fine. If not, you can always sell into the pullback. If it runs up all day long, even better. So those are the type of chart patterns we look for. And if you're trading big momentum runners, there's plenty of range. So but Gold Star Award of the day goes to, who posted this one? Polly did. So thanks, Polly, for that one. That's the first one of the day. That's the best looking chart from any of you guys today, right? That's with the caveat that the bearish engulfing would have me nervous long up here. So I would sell it all if I were currently long. I would sell it all if it loses 80. I would scale in if it breaks over 88, maybe over 90. I usually don't buy 9s though. So I would get in at say 87, 88. That would be my last entry until it breaks over the 100. This LSI chart looks spectacular. That's another Gold Star chart, right? Not as much as the other one because the range isn't quite the same, but it's a really spectacular chart. All right, let's take a look at some other charts. What do we have? Hey, Brian. Hey, Ben. They say, hey, Avi. Yeah, short crude. It's on my radar. I think I sold my dust yesterday. I was shorting gold, but dust, and it did really well for me. I was in the money on dust. This falls in how to short the commodities swing trading portion of today's broadcast. Yeah, I've been swing trading dust, the inverse for gold, the last couple of weeks, and I sold it yesterday. I believe I sold it all yesterday, most of it yesterday. It'd be worth a shot over the 20. He's asking about the equivalent for oil. It's still not a play yet, but it looks good at a 2-day high. So I'm going to start scaling in, especially if it gets over 20. But I may start a small feeder trade if it breaks the 18. So when a chart looks like this, it tells us exactly nothing, right? There's no valuable intel on this chart. Well, actually, there is plenty of information. There's the range, the volume, the trend. Now, since we're not looking at this for a day trade, we don't care about the range as much, and there is no discernible trend. But if it gets over the whole number, 18, we're off to the races. So what we want to do is look for a play, build the trade north of 18, and then scale in and significantly trade it over 20, and again up over the 25. So may well do something if crude drops, but in the meantime, we're looking for upside plays in some of these momentum runners. All right, other charts, gang. We've got some time here. Let's see, Apple and Nike and AMD, sure thing. AMD, good, nice momentum play. And the moment, as long as the momentum holds, it's good. What I don't like about it is what? It's right under the 100. So I'd be a seller of this instrument between the 90 and 100. Or at least if I were long this right now, I'd be trailing a stop right near 90 on AMD. I would not scale in until 102 or initiate a new trade. But the momentum's good. Yeah, Facebook looks great. I see nothing wrong with that. That's a good chart. I'm pleasantly surprised. I didn't think Facebook had any strength to it recently, but because I haven't checked. But yeah, it's a nice directional uptrend for longer term swing traders or active investors. I'd be looking for, again, not a trade recommendation, but I'd be going long over 362 with a protective stop right under the 340, say 335, 337. So that's a box range breakout if we get to 362. But yeah, it's good. I'll try and keep these guys. I will keep these on the watch list for next week. Hey, Doug, sure thing. Let's take a look at AGFY. Okay, I'm not familiar with that one. Sounds like a silver play. I remember that when I was pre-med at UCLA taking organic chemistry, and remember AG is the periodic table element symbol for silver, like AU is for gold. Things that you never use in your life. Periodic element, the table, how many electrons and blah, 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 blah. Who cares? I just care about the money. AGFY looks good north of 15. That's good. That's good. It doubled and may do a triple, may get back to its previous highs near 21. So it's already doubled off the 7 low up to 14. And I like the fact that it's got an inverse head and shoulders. That's kind of very secondary, not extremely important, but left shoulder head, right shoulder, inverse head and shoulders. We got a congestion box here south of 15. So that's all set. That all sets up for a long play, especially with the big green candles lately. I like the 2 big green candles. So yeah, that's a good play. I'd personally, again, not a trade recommendation. I would buy it right over 15.6 with the protective stop of say 14. But yeah, it's a good chart. Now, if you want much more coverage, in-depth detail than live markets, of course, I do urge you to take advantage of my Trading Open live room that I've offered for over 20 years now, for 2 decades, 21 years now. I've ran Trading Open, training tens of thousands of traders over that time, over the last 2 decades. Popular with both intraday and swing traders. And we cover both day and swing trading. So if you're not yet a Trading Open live room member, do give it a try. Your trial membership is absolutely easy way to get started. Okay, what else? Other tickers. Oh wow, a ton of them. Sorry, I don't have. I'm not gonna make time for too many, but I'll try and get in as many. Wow, that's a great chart. Another perfect chart. You guys are full of goodness. You're full of great charts. Thank you. I wish you guys had charts that look like this that were 20 or 30 bucks a share, because that's my preference. That's my preferred feeding ground is charts in the 15, 20, $30 a share range. That's my bailiwick. But these are great too. These are wonderful charts. So absolutely a good play. I'd play north of 84 with a hard stop at just under 80. All right, so not to handhold, but personally, and I might buy this myself, that's perfect. Now again, I don't know what the name of the company is. Do I care? No, we don't care about the names of the companies. We don't care about forward-looking PE ratios and earnings, blah, 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 blah. All we care, you do want to be aware of the earnings calendar, so maybe you don't want to hold overnight an earnings release. But other than that, we don't care about the names of the companies. We don't care about the industry segment. All we care about is price action. And the more consistent and the longer term, it's like finding a good, honest person, right? You like people that are honest and hardworking. Like this, the chart would have been for our trading accounts if we'd all been trading it. So thank you for that one, PRFT. That comes to us from Bill. Thanks. Hey, Robert, let's see, 3D. It's been good for day trading. I don't like it for swings, though. On days when it runs hot, it runs really hot, but so far this is an inconsistent picture for a swing trade. If it breaks 42, sure, that's the whole number of resistance, but nah, I'm kind of ambivalent about this. I prefer charts that don't have the guesswork in them. I like charts that look like this or this, right? That have minimal pullbacks and a history of strength. But for intraday, it's good. We'd already looked at Apple earlier this morning. Like I said, it looks good north of 140. And if we pull up Nike, it's just doing it with the gap up back on Friday on the earnings. Yeah, remember, it gapped up to 152 from 130 and change. Looks great, north of 162, right? Always have a head fake avoidance plan or a false breakout avoidance plan. Always, as you may have seen in my stocks and commodities articles and my money show appearances, I always advocate never buying an obvious breakout. It's like that classic poker movie called Rounders, where they say if you have to look around the table and you wonder who's the fish, who's the weak player, you got to look in the mirror and kind of thing. And as an active trader, the reason I say that is you don't want to be the public, the dumb money, the retail traders that buy, well, I'll just go along the instant it breaks out to new highs, because then you get stopped out, and that kind of sucks, right? So what we want is to make money, not to lose money. So one of the strategies that I've developed is to have a false breakout filter, kind of slightly above the obvious dumb money, public money high we don't want to buy. So I would never buy, let's say it opens up at 160. I would never buy it at say 160.1 or 160.2 or so forth. And on this particular chart, because the range, I'd make it go up another full $2 before touching it, because it's at a decade value, 160, and we never buy nines. So selling 159 would have been really intelligent. The next long would be over 162. But yeah, good charts, thanks. Hey, Charles, let's take a look at Baxter. Bravo, Alpha, X-ray. I'm not seeing anything on that chart that I like. I won't say it completely sucks, but mostly sucks. On a scale of 1 to 10, I'd give it a 1. On a letter grade scale, I'd give it an F, maybe a C- or a D. But like my question to you would be, why on earth would you consider trading that when there's charts like that, or that, or this, or this, or this? Why on earth would somebody trade something that looks like this? I'm just curious. Let me know. I mean, why would anybody trade this? I'm quite curious. I mean, and when I ask that kind of question, invariably people say something, well, I read there's a good news story or there's positive, blah, blah, blah. But no, that's a terrible chart. Let's narrow the list. Yeah, it's on the fence. Aha, scanning mission accomplished. See, I just cut a list of 10 down to 4 candidates that are all obviously, you know, the best charts out there, right? You want to trade the obvious strong charts that are consistent, right? Those are all rock star charts. Nothing wrong with those charts, at least that I can see. But charts that like the BAX chart that's going nowhere fast and going sideways would be of less than no interest to me because it's not going up. See, I like to trade things that go up. I mean, that's just me. Because I don't get paid as much for trading stuff that goes sideways. I don't know about y'all, but if I buy something that goes sideways, I don't make money, right? I kind of just tie up capital needlessly. I get paid when I, like with my winning Smith & Wesson, I locked and loaded, nailed that guy. Average cost basis I was in from around 29.50 and I sold 38 in front of my traders. I called it the exit when it was right. I think it was like 39.30 or something in live real time on Thursday on the big run up in Smith & Wesson. I said I'd be selling into the strength, and that was smart. Because remember, I admonish, I don't just run the company. I practice what I preach. Like that hair club for men. I'm not the owner. I'm a customer too. Sell the nines, right? I didn't sell at 39. I wanted to get a little bit of wiggle room, so I sold my position. I think virtually the entire position at 38. So cost base is 29.5, and like 90% of the shares I sold right near 38 and change, or 38. I think it was 38. Anyway, that's a good example of a round trip for an exit. So good charts. Any other charts? I think we're about done for that. I think that's about it. Oh, just seasonally. Okay, thanks. See, someone's asking about Microsoft. Okay. Usually the most active tier 1 leads have a firm place in an investing portfolio, but not so much for active traders because the leverage is no good, right? For $200 a share, if you look at the June range, just look at the month worth of range on that thing. We had 240 to 270. So it's only got less than 10%, 30 points range in an entire month. Whereas, you know, if you look at one of these charts, you know, this thing has a much wider range going from a low of around 30 up to just under 90. So good stuff. So that's our stock market. It looks like buyers in charge. A last technical note, one of the patterns that I often speak on at my money show appearances and publish about in my various industry appearances and articles and so forth is this, where you got an increasing whole real body height of candles. And my colleague Steve Nissen had mentioned that that's called, I think, 3 soldiers or something like that advancing. So learn candles from Steve Nissen at Candle Charts. Learn Western technical professional trades from me here at Trade Mastery. Learn from people who actually know what they're talking about. Anyway, increasing whole real body heights is, you know, bulls are firmly in charge, right? So until they're not, but it's a long story until it stops. So it's like a game of musical chairs, you know. The stock market's playing its music, we're all walking around, and when the music's over and the stock market stops going up, you want to trail tight stop. So do be prepared for the unexpected reversal Monday, or I should say Tuesday or Wednesday. Just a reminder, capital markets are closed on Monday in observance of our 4th of July weekend. And I did want to wish all of you the very best for a safe, peaceful 4th of July weekend, and hopefully a profitable week ahead. We've got so many good opportunities out there and some really intelligent, smart charts and intelligent, smart traders in my live room. It'd be great to see all of you who are kind of on the fence or just wondering if it's the right place for you personally, and try it out. It's only 29 bucks. Money back guarantee on the 29 bucks. So if for any reason you're not satisfied, I'd be happy to save it. Totally risk-free, right? And good professional entries. Echo, stop. Echo, what's the weather? Echo, weather.
right now in Colorado Springs. It's 76 degrees Fahrenheit with clear skies and sun. Today's forecast has some
Echo stop. Okay, so it's 76 degrees here in Colorado Springs. All right, well, anyway, it's almost 80 already. It's only 10:30. Anyway, trading the open live room, certainly like to see there. We spend a lot of time mostly on intraday setups, of course, and live real-time alerts, but we also cover swing trades as well. So if you trade stocks and ETFs, it's the right place to call home, or at least to try it out. So wanted to wish you all the best and see minimal pitch, maximum value, 99% content, giving you guys hopefully useful intel and some insights that can hopefully keep you on the right side of your trades. Wow, big turnout this morning. A lot of you straggled in late, so good to see you here. And happy 4th, Wendy. Yeah, you too. All right. Yeah. And I agree, Bill. Good charts. All right. You folks take care. Play safe. I'm a big fan of, like Sosnoff says, trade small, trade often. It's much smarter to focus two big shifts. The two biggest changes that I found helped me improve my trading enormously was to, number one, cut down my share size, so much smaller trades. For example, swing trades, I always start off with less than 100 shares of anything, and often even odd lots down to 20, 30, 40, 50 shares. And that way, that gives me the leeway to not only, number one, trade more instruments, because I can spread my capital further. I may be in, anywhere from 15 to 30 positions, but they all start off small, under $1,000 or $2,000 worth of the instrument. For example, you get an example of my inverse plays, a winning play. And my favorite inverse UVXY, I bought yesterday at 26.10. Now, for all of my live room members, not to be an I told you so, but you guys were skeptical. I could tell one of my traders, a really smart guy, Mick. He's one of the smartest guys I've ever had in my room. Pleasure to have the guy in the room because he's brilliant, but he's totally down on this instrument. But I told them 26.10, and all my traders long over. I think the official live alert was 26.30 or something, but I told traders I was getting started early at 26.10, which I did, and then I scaled in on the way up. Oftentimes things get beaten down sharply, recover, and you want to be able to know how to capitalize on those. So I'm proud of the fact that I bought 26.10, but only 30 shares, and then I bought again at 26.40, another 30 shares. That's only 60 shares, about $1,500 worth. So really itty bitty tiny speculative pivot trade. And if it bites me in the butt and it goes down to 26, let's say it gaps down to 25.7 or something on Tuesday, and my cost basis is like 26.3. Well, on 60 shares, do the math, times 60 cents, be a $36 stop loss. I don't know about y'all, but that's how I like to start off. If I'm wrong, under $50, under $100, that's my penalty for being wrong in a trade. Now, if I scale in, which I absolutely do all the time for my swing trades, most of my swing trades I scale in. If this guy breaks out over 28, 29, 30, I'll scale in on the way up. And I may be in, anywhere from 8 to 12 or 15, 20,000 worth of this by the time the trade is ready, ripe for the picking to be sold. But I start off really small. And that's one thing that I advocate for active traders. But that was my entry of the week was buying 26.10 for swinging UVXY. My exit of the week was selling Smith & Wesson at 38, which is a really brilliant freaking exit, I think. So I was in from 29, right? 29.50, and I sold the 38 right there. Good thing I did too, because look what happened. Sell into strength. That's kind of final tip. Sell into strength. When you're this much in the money, I was up almost $10 in less than a week and a half in my real money live trade for Smith & Wesson. I bought strength on the way up and I sold because it looked really, really extended up here. At the time it was, when I sold it, when on the way up, it was very green. And then the fact that it started to turn red and pull back off the 40, I always sell 9s. That's why I sold 38. So that was my exit of the week. Live real money trade was selling Smith & Wesson. And my entry of the week was entering the UVXY yesterday off within a dime of the exact low of the day. So always fun to, I do both day and swing trades. And the trick is trading charts with big ranges is really important. And by that, I specifically do not mean like a $3 stock that runs to $5. Yes, percentage-wise, that's a huge percentage range. But because the haphazard random nature of the under $10 stocks, those are generally for amateurs and inexperienced traders or people trying to mislead the public. But you do not want to, these are the kind of charts you want to trade, right? Like Smith & Wesson. You don't want to trade under $10 stocks as a rule of thumb, unless you got a really good reason. All right. I'm going to see you guys next time. Hey, Lucy, yeah, my YouTube channel is Trading Television. I've only got 10,000 subscribers, but I treasure each and every one of you guys. So, yeah, so Lucy, my YouTube channel is Trading Television. And I don't post much on it. I occasionally post these Saturday week aheads. That's about the only content I post on it. Because I don't want to give away a lot of stuff for free because I'm a professional and I get paid for my content. Dagnabbit. So join me at Trade Mastery for the live room and you'll be able to learn with me 5 days a week, barring holidays like Monday, right? So I'll see you guys Tuesday in the room for those of you live room members. If you're not yet a live room member, I want you to take care of that this weekend. Do be sure to join. If you have not yet trialed it, do trial it. If you've not yet joined as a member, do give that some thought and I'll see you there. Hey, you too, cheers. A lot of traders from all over the world. So I think that's it. I don't see any other questions. All right. You guys have been great. Thank you for being here. Have a fantastic 4th of July. Give some thought to changes you want to start making in your trades. The main thing is cut down the share size, be more discerning in terms of the exact patterns for entries, and be able to exit at the first sign of trouble, like I did with Smith & Wesson, locked and loaded, fired a down range at 38, and that was good. Now, will I rebuy Smith & Wesson? Yes, I will rebuy it if it does bounce over each whole number, say 31, 32, with an exit target exactly where it was last time at 38. And then if it keeps going up over the 40, I'll buy over the 40, say 40 and a half. So that's the cycle of 10s, or the trade within the multiple of 10 between the 30 and 40. That's what I did successfully this last week. So y'all take care, and I'll see you next time. Bye for now.